And we are working our way through this Tuesday, Crop Progress Tuesday. Mark Oppold, it is going to be a turnaround Tuesday, as Christina mentions. Well, so far it has been a turnaround in the livestock complex. We'll get to that here in a minute. Let's go to the board and check out the corn futures as we sit right now. We saw a higher trade overnight after USDA putting out their updated progress numbers showing no change in corn conditions nationwide, and knowing that we're entering the heat of the summer here now, July beginning this weekend. We are 3 to 4 higher in this corn trade. That puts our December up to, excuse me, over the 380 level here right now. That's the high of the day, 380 3/4. And with that introduction, we go to Todd Horwitz, Bubba Trading, BubbaTrading.com, live at the edge of that trading floor. Todd, happy Tuesday.
Turnaround Tuesday. How you doing, Mark?
How about that? I didn't talk to you last week here, but I know you and Marlon took care of things. All right, grain trade here. We're entering July. What's Todd Horwitz think about the market?
450 December corn. I still believe that. That's my actual target. I think, obviously, I don't think it's going there tomorrow. I think there's going to be some turbulations we've seen here. I'm actually a little bit disappointed in today's action based on the weakness in the dollar. I thought we should be a little bit higher here, but and especially after coming off corn last week, really got popped pretty good. Almost every day was lower. So I'm a little disappointed by the action, but I think it'll be fine. I think that we did hold support level, which was really important to me, 370. And of course, I do look for much higher prices. I think, again, it won't be easy. It's not like they're going to stand out there and make it that high, but it will, I think, eventually get there. I think there's a lot of factors in its favor. And I think, we get so depressed sometimes that we then get that big push up. And I think that's what we're going to see as the year wears on here.
Very good. So higher here in the corn trade, even higher. How do you, what do you make sense of the soybean trade? It's supposed to be more acres out there, yet we're 7 cents higher this morning.
Well, soybeans are a whole different animal right here, right now, and there's a problem here. November's got to get through 950, or I don't think they're going higher. Now they did the first key test of $9 on the downside. They held, so that made me happy. But overall, it's very tenuous here in soybeans. I believe they're going to go higher, but until they can get through 950, I'm not really a fan. I'm not a seller, but I'm certainly not looking to get in because this has been a very wild trade if you've watched, and you continue to stay within that range, but continue to peg out new lows, and that's a very big problem. All
right, and then we need to talk about wheat here. Get your thoughts there as well. A lot of pressure, Chicago and Kansas City wheat yesterday, getting a little bit of that back here today.
Well, if you look last week, wheat was tremendously strong compared to everything else. And I think getting a little bit of natural selling, I'm not concerned at all. I think wheat will see 550 this year. That's my overall long-term goal here. So I'm looking for higher prices. I think we're going to see much higher prices. And if we tie in some of the other factors, as we talked about, if the markets sell off, a lot of things can happen to bring more money in here to push these prices higher. I think we see higher prices, and I'm looking for a spot to buy.
What about that money flow here? We hear back and forth, money flowing in and out of commodities or in and out of the stock market. Where's it going? Where is it right now? Where does it want to settle?
It's still in the stock market, Mark. We still have extremely low volatility. There's still too much complacency, and everybody knows the markets are never going down again, which, of course, becomes the bigger warning sign.
Yeah.
Eventually, you saw this morning, Mario Draghi from the European Central Bank got involved with the euro, and, of course, that spiked, which helped us push the dollar down. But at the end of the day, eventually this has got to stop, and you will start to see some sellers come in, and I think that money will then flow into the alternative space, because if we look at prices, we're actually very depressed in where we should be compared to everything else.
Very good. Todd Horwitz, Bubba Trading. It's BubbaTrading.com. Take a break, come back, and we'll check livestock. All the arrows, at least last look, pointing lower. We'll get his thoughts there. Cattle, feeder, cattle, and hogs. Numbers, I'm sure, as we come back. And 10 minutes to the top of the hour, and back to Chicago, and Todd Horwitz joining us here from the edge of the trading floor, now looking at the livestock complex here. What a day yesterday. We didn't have a chance to visit with you. Were you one of those that were surprised by the action in cattle and feeders?
Giddy up to the moon. They
yeah.
went. No, I wasn't really surprised. I didn't like the action, to be quite honest with you. I've been looking for fats to trade down to about 113, which they did. So I was happy and looking for a spot to buy. I didn't like the rally yesterday. These limit up moves are usually not great if you're looking for a longer term trend to continue. Yeah. And I think that means that we've got one more little push down to the downside before we're going to get that steady rally going up. So overall, I didn't like it from that standpoint. I think it's better when you don't get those, because that looked like more short covering, like people were scared or trapped and had to get out. And I think the same thing in feeders. Feeders almost reached my downside objective, but then they popped a little bit too soon. I believe there's probably a little bit more downside. Now, I wouldn't sell them here, and I'm not concerned, I'm not worried, but I think there's one more little push down, and then I'd like to be a buyer, because, again, I do believe that going forward we're going to have a very solid year here, and we're going to get higher prices, but we have to reverse some of that backwardation in fats, and we've got to see a little bit more action. But, I didn't like the overaction, and hogs, of course, were, I think you're seeing a big problem July versus August. Now, you're seeing the gap wide. A few weeks ago we were talking, they were both 82. Now one's 85 and one's 78. So it's now becoming more apparent that there's a little bit of a squeeze going on here in the front, and I think that will lead to some lower prices. I'm just looking for a spot to get in, but I'm certainly not a buyer at these levels. I'd certainly be hedging and protecting. And if you look at some of the outside markets, you look at oil today. Oil, all of a sudden, as I've been talking about over the last couple weeks, it's going to get a bounce here, and I think this is it. Look for about 46, 47, and then I think we make our down road to 40.
Very good. Well, that's a lot of information in a short time here there, Todd. But bottom line, I want to go back to your initial comment there on cattle. The reason you said I don't like the limit up yesterday, not that you don't, you understand that the producers want a higher money, but you're saying that longer term, you like a market that kind of ratchets itself higher, because longer term, that's going to be more supportive. Is that right?
Absolutely. Mark, when you get these big, giant moves that go either one way or another, it doesn't matter which way, usually like a big move to the upside at the end of a rally usually signifies the rally's over. So, that's not done by normal buying. That's done more by panic buying or people that need to buy that were short. So I don't want to see those rows. I want to see them go up. I'd rather see them go up $1 3 days in a row than $3 in one day. Again, if you're long and you own them, you want them to go straight up, but that doesn't happen that way.
Yeah, very good. Todd, we're going to get the numbers for our viewers and listeners, and we look forward to getting you back here tomorrow and see what happens on Wednesday.
Thanks, Mark. Have a great day.
Hey, you too, as always. Todd Horwitz, Bubba Trading. It's BubbaTrading.com. All right, numbers as promised here. We are lower, and we have expanded limits here on the live cattle and feeder cattle here on the day. That means we can move higher or lower in live cattle by 450 points. Let's go back to live cattle, and we are down over $1 across the board. June down $1.26, 120.22. August down $1.90 at 116.38. Feeder cattle have expanded limits. They can go 675 points in either direction. Again, that's what Todd Horwitz talking about. These gyrations not healthy longer term. August feeders down $2 after being up $4.50 yesterday, down $2 so far today, 147.45. September down $2.05, 146.85. Hog futures are lower, not nearly as much, but they are weaker. The July down 64 at 86.38. August hogs down 55 points at 78.12. We can look at the beef and pork cutouts here. Beef cutout, mixed trade starting out the day here. The lowest ends early in May, and in our our hog pork cutout, highest since October of 2014, Janet. So two factors in the trade.
All right, thanks, Mark.
Sure, you bet.